Very good afternoon, everyone. My name is Mrinal Bhaskar, and on behalf of Alliance for Energy Efficient Economy, I am delighted to welcome you all to this important webinar on strengthening Scope 3 emissions reporting and decarbonization strategies in the context of business reporting, responsibility and sustainability reporting, BRSR, and carbon border adjustment mechanism, which is CBAM. In today's rapidly evolving landscape, sustainability has become a paramount concern for businesses of all sizes. As we strive to mitigate the impact of climate change, organizations are increasingly recognizing the importance of comprehensive carbon management. As we continue to push the boundaries of corporate sustainability, Scope 3 emissions has emerged as a critical component of an organization's overall carbon footprint. Unlike Scope 1 and Scope 2 emissions, which are relatively easier to measure and control, Scope 3 emissions encompass the entire value chain, which makes them far more complex to address. However, the rising regulatory demands such as India's BRSR and European Union's CBAM, organizations can no longer afford to overlook Scope 3 emissions. These frameworks call for transparent reporting and actionable decarbonization strategies using businesses to strengthen their environmental accountability and improve their sustainability practices. Today's session is designed to explore some of the challenges and opportunity in managing Scope 3 emissions. We will dwell into how organizations can accurately measure and report these emissions while aligning with BRSR and CBAM guidelines. We will also touch on strategies to mitigate these emissions, focusing on collaboration across the supply chain, investment in sustainable technologies, and the implementation of circular economy principles. We are fortunate to have a distinguished panel of experts with us today who will share their insight and experiences on this pressing issue. I encourage all of you to actively participate in this important discussion, ask questions, and share your perspective. By the end of this webinar, we hope you will walk away with the actionable insight, practical solution that can help your organization not only comply with this regulation, but also position yourself as a leader in the global drive toward decarbonization. Thank you for joining us today, and I look forward to an engaging and insightful discussion. With that, I'd like to invite Mr. Pramod Kumar Singh, Senior Director, Research and Program at AEEE, to deliver the keynote address on importance of Scope 3 emissions. Over to you, sir.
I'm audible. Welcome, everyone. Today we woke up to the extremely sad news of Sri Ratan Tata's passing away. He will always be in our hearts, not only for his contribution towards the economy and globalization of India-led business, but also for inculcating a sense of social and environmental responsibility in the business. He himself was the epitome of sustainable living, which brings us to our topic for today. It's related to the Scope 3 emission and its importance in light of BRSR and CBAM. As India charts its course towards sustainable development, we are tasked with finding the right balance between economic growth and environmental stewardship. When we talk about the Scope 3 emissions, we are referring to the indirect emissions that arise from the indirect and the entire value chain, everything from the extraction of raw materials to the end use of our products and how it ends up being disposed. For businesses in India, this means we must look beyond our factories and our offices. If we look at globally, Scope 3 emissions often account for a substantial portion of an enterprise GHG. It can also be 70 to 90% of a company's total emissions. For example, in the case of manufacturing and retail. We also know that estimation of Scope 3 emissions is challenging. However, it's not impossible. It's challenging because the supply chain is quite complex. If we look at India, the data availability and quality of data, that's an issue. Also, the approach required to estimation of Scope 3 emissions, it will vary by sectors, it will vary by industry types. However, there are protocols and reporting standards in place for companies to estimate their emissions, to track their emissions, and which will also be useful to manage their emissions. With initiatives like the BRSR and CBAM, we have an opportunity to make a significant impact. Regarding the BRSR, it's crucial to understand that it is not only a regulatory checkbox, it's an opportunity to showcase our commitment to sustainability. And it encourages companies to transparently disclose their environmental and social impacts. By including scope 3 emissions in the reporting, the companies can reinforce their commitment towards sustainability. We already have examples from India for several domestic companies who are doing environmental product declarations or EPDs. EPDs provide detailed information of a product's impact on resource use, on emission, on waste, and other environmental indicators based on a life cycle assessment. There are several companies, to name a few: Tata Steel, Ultratech Cement, JSW, Bhardwaj and Boys, who declare EPDs as part of their sustainability commitments and as part of their transparent disclosure on carbon emissions. The CBAM mechanism, definitely it would pose challenges for India, but it's also an opportunity to make transformation in our efforts towards energy transition and sustainability. I would like to share an example of Government of India's PAT scheme, Perform, Achieve and Trade scheme. When it was in the formulation stage, companies were worried how we are going to track our energy consumption, what baseline is going to come up, what kind of targets are going to come up, how we are going to do the normalization of savings, how we are going to manage all the compliance and reporting requirements. However, over a period of time, industry realized that the PAT scheme was in the benefit of the industry, and it was a move to force industries to improve their profitability. We should consider BRSR and CBAM in a similar light. It's a blessing in disguise. It's an opportunity for innovation. It's an opportunity to demonstrate leadership in sustainability efforts. And how do we move from incremental changes to business transformation? So I wholeheartedly thank our speakers for coming together and for their enthusiasm in sharing their knowledge and perspectives on this topic. They say if we want to go fast, we should walk alone. But if we want to go far, we should walk together. So at our organization, Alliance for an Energy Efficient Economy, we have embraced a triple sector approach to bring together government, industry, and civil society to drive meaningful changes. So together we can create a sustainable future for India and set a positive example for the world and for our own future generations. So with this, thank you all once again and look forward to great discussions today.
Thank you very much, sir, for your address and providing us a comprehensive overview of the challenges and opportunities surrounding these indirect emissions. As we continue to explore these complex topics and discuss potential solutions, we are fortunate to have our team panelists who brings a wealth of experience related to the topic. I am pleased to introduce our distinguished panel of experts before we begin the panel discussion. Our first panelist is Mr. Sanjeev Bhatia, who is the founding director of Sustained Consulting Private Limited and the president of the Governing Council of Stenum Asia. He is also a member of the Executive Council and Managing Committee of AEEE. He has deep practical knowledge of how global value chains function and how to make them more efficient and sustainable. He has 2 decades of international business experience in the apparel, footwear, and luggage industries. Mr. Sanjeev, we welcome you in the panel. Our next panelist is Mr. K.D. Bhardwaj. He's working as a group head and director, Environment, Climate Action, and International Services at National Productivity Council. He has more than 30 years of experience in environment management and productivity. Mr. Bhardwaj has been involved in the waste management studies for various industrial sectors and initiated strategic planning for green productivity. We welcome you, Mr. Bhardwaj, in the panel. Our next panelist is Mr. Aditya Singh, who works as a Associate Vice President with Siemens Advanta, focusing on helping customers define sustainability roadmaps, evaluate decarbonization solutions in hard-to-abate use cases, as well as enabling emissions baselining. He has over 16 years of experience in consulting and industry with a focus on sustainability. We welcome you, Mr. Aditya, on the panel.
Thank you.
Our next panelist is Ms. Sarika Gosai. She is heading the technical assurance of Forbes Mazar in India and leading the ESG and sustainability practices there. She has more than 22 years of experience in the field of technical advisory, research, training, and servicing large clients in the area of auditing, accounting, and corporate laws. She has co-authored 2 books and speaks on multiple forums on audit, accounting, ESG, and sustainable matter. We welcome you, ma'am, on the panel. Our next speaker is Mr. Indrajit, who is working as a lead sustainability and ESG for CBRE India. He has over 15 years of experience in the sustainability, ESG strategy, social strategy, market research, project management, data analytics, and customer support. He has co-authored 2 books on disability and ESG and also led 2 leading industry reports on skill development and waste management. We welcome you, Mr. Indrajit, in the panel. Our last panelist is Ms. Shama Jain, who is working as a deputy head of sustainability at Hindustan Zinc Limited and leading the sustainability reporting, ESG governance, and policy development in the Hindustan Zinc. With over 16 years of experience in the environmental management and HSE system, she specializes in GRI standard, TCFD, and TNFD. She is also a certified sustainability and climate change CAP 2.0 assessor with CII. We welcome you, ma'am, in the panel. I now request Mr. Bhaskar Natarajan, Senior Fellow at AEEE, to please moderate the panel discussion. Over to you, sir.
Good afternoon, everyone. I hope I am audible. I believe there is some issue with my camera, although I can see my image on my screen. I'm not sure if all of you can see, but let us see as we go along if the situation will improve. But I do hope I'm audible, and once again, thanks to the impressive list of panelists that we have been able to put together to discuss this important issue of Scope 3 emissions and the challenges that the industry is facing today. Pramod's initial address has set the tone for the whole this thing to be the whole direction of the discussions. And I'm hoping, as Mrinal said in the earlier part of the debate, that we hope there is something that people can take away. And I do see over 100 people who have joined us. Indeed, a very long list of people who have us, and without taking up any more time, let me get into the panel discussion and sessions anyway. As all of us are aware, the Scope 3 emissions, as Pramod said, form almost 100% total other Scope 1 and Scope 2 emissions. There are a couple of numbers that I had seen where the numbers are even more than 100%. And this is much like energy efficiency, where I have to tell people to do things so that I can report a better score. And in this Scope 3 emissions, this is precisely what we are trying to do. We have a huge number of categories, 15 plus categories, which include suppliers, commuting, travel, and various other aspects of emissions that go into calculating Scope 3 emissions. So without taking up any more time, let me now request, I'm going to follow the following procedure. I'm going to request each of the panelists to perhaps take 1 minute and tell us what your organizations or you have been involved with in brief, without getting into the issues that the questions are going to address. This is just for the participants to know a little more about your background in addition to the introduction that Mrinal has made a little while ago. Following this, we are going to go down the list and get into the questions that we have. And I'm sure we will try to keep at least 10 minutes for discussions and questions from the audience that we have. And therefore, let me now request Mr. Sanjeev Bhatia from Stenham Asia to perhaps take a minute and tell us what their organization and he is involved with in Scope 3 emissions. Over to you, Sanjeev.
Thanks, Bhaskar, and good afternoon to everyone. It's indeed a privilege to be here and to share some of the experience and learnings that we've had. So Stenham Asia is a 17-year-old not-for-profit whose main focus is to help SMEs become more resource efficient. So our history is that we have worked with almost 1,500 SMEs in about 10 Asian countries now, helping them become more resource efficient. And I would say in recent times, about 10% of that interaction has been also very specifically on decarbonization. So 90% has largely been on energy efficiency, waste, etc. But of the last few years, we have noticed a very clear intent and direction towards decarbonization. So in the last few years, we've probably done about 100 plus GHG inventorization. And for us, it's not the reporting which is more critical, and we don't do too much work in reporting, but we actually work in either helping the enterprise actually reduce its emissions or towards a long-term net zero roadmap. So with that, back to you, Bhaskar.
Yeah, thanks a lot. May I now request Mr. Aditya from Siemens for your institution and your work on Scope 3. Over to you, Mr. Aditya.
Yeah, thank you for that, Bhaskar. So I'll try and keep it short. I think many of people in the audience will be familiar with Siemens as an organization itself. I work for Siemens Limited. I essentially represent both the organization in India, which is a listed company, but also the larger organization in Germany, Siemens AG, for which we are a subsidiary. Siemens has been at the forefront of topics like digitalization and sustainability for decades now. We essentially occupy the entire value chain as it stands right now, whether we talk about electrification, digitalization, monitoring of sustainability, helping companies baseline carbon emissions, but also more importantly, helping them really come up with innovative solutions by which, for their unique circumstances, they can go about reducing their Scope 1, Scope 2, and Scope 3 emissions. It's a tough ask. We've had very interesting conversations with many of our clients in the Indian market to try and reduce Scope 3 emissions. There's always multiple parts to it, for which I'm hoping we'll have time to discuss later today in the session itself. But suffice it to say, we're quite happy to really be able to collaborate with potential clients as well as partners in this arena as we try and make industries across the board more sustainable going forwards.
Thank you, Mr. Aditya. May I now request Ms. Sarika Gusain from Forvest Mazars? Over to you.
Yeah. So first of all, I would like to extend my heartiest thanks to AEEE for inviting me over and giving me the opportunity to share my experience, or rather working experience, on the captured matter. So we at Forvest Mazars in India is an international firm having offices in 100 plus countries and over 400 plus combined offices across the globe. In India, we are present in 9 cities and more than 55 partners in India. So we are doing all sort of services like assurance, accounting, taxation, digital trust, including ESG. And I had the ESG practice alongside with the technical function for the entire practice of the firm. So having more than 2 decades of experience in financial audit, recently ventured into the ESG domain, taking baby steps, but really enjoying my triangle of experience into financial audit and being a company secretary into compliances, and now being an ESG advisor and an assurance agencies too for a couple of companies. So as far as ESG is concerned, we are advising our clients on ESG strategies, roadmaps, carbon footprint calculations, their net zero dreams, what they are looking at, and of course the assurance exercise, which is recently embedded into the Indian economy by SEBI. And since India is heavily regulated, so we'll understand how Scope 3 is being embedded into the bloodstreams of the companies and the corporates. Over to you, Max. But I'm done.
Rinal or Bhairav, do you want to come in?
I think he's disconnected. Mrinal?
Yes, sir.
He is disconnected. I think Mr. Bhaskar is disconnected.
Okay, just give me 1 minute. We'll check. By the time he joined,
may I request Indrajit Shah is share his thought initially.
Thank you, Vipin. Thank you, everyone, for the presence here. And thanks to AEEE for this opportunity. My name is Indrajit Shah, and I lead CBRE India's sustainability and ESG practice. CBRE is the world's largest commercial real estate services and investment company. We are Forbes 135 ranked with a market cap of close to 32 billion as of 2023. In terms of ESG and sustainability services, we provide the complete suite of services from strategy to implementation, including certifications, as well as reporting and training. I really look forward to sharing my thoughts and learning from the esteemed panelists here. Thank you so much. And back to you, Vipin.
Hi, sorry, I had some network connectivity issues. My deepest apologies. I'm back now, and I hope all of you can hear me. I'm now going to request Ms. Shama Jain, who is from Hindustan Zinc of the Vedanta Group, to make a few remarks. Over to you, Ms. Shama Jain.
Thank you. Thank you, Mr. Bhaskar, and good afternoon, everyone. And I would like to start by thanking AEEE for the invitation to participate in this important discussion on the Scope 3 emissions. And I think this is a critical topic, still an evolving area, and I don't think so there is any company who is yet perfected a method to capture it fully and accurate reporting on this Scope 3 method. So I really thank AEEE for this webinar, and I am Shama Jain. I'm part of Hindustan Zinc Limited, which is India's largest and world's second largest integrated zinc producer. We are the third largest silver producer globally, and it's a fully integrated operations which are there, which is having more than 50 years of operational experience that Hindustan Zinc is having. So Hindustan Zinc is, I would say that in this era wherein everybody is focused around the climate actions, so our net zero journey is also powered with many of the climate actions, be it the transitioning towards the renewable energy or deployment of EV vehicles. We become the first company in India to deploy the battery operated electrical vehicle into the underground mines. So, we have these stringent emission targets for Hindustan Zinc Limited, which is Scope 1 and Scope 2 emission reduction by 50% by 2030 and Scope 3 emission reductions by 50% by 25% by 2030. So I think this is a very important topic that we are going to have a discussion today. And I think we are on that path because we have already started the journey over Scope 3 reporting. And this year we had worked in formalizing a SOP or the policies for us that, we can streamline the SOP for these Scope 3 emissions calculations for us, how we can connect with our suppliers. And so I think there is a lot more that we can have discussions in the upcoming the discussions that we are going to have today. But yeah, this is for Hindustan Zinc, and I would like to welcome everybody who is there and joined us today. Thank you.
Unmute yourself, Mr. Bhaskar, please. Unmute.
I'm sorry. Thank you, Ms. Shama Jain. Over to you, Mr. Bhardwaj from NPC.
Thank you, Mr. Bhaskar. Thank you so much. Good afternoon to all of you, all the panelists, AEEE, and all the participants of this webinar. National Productivity Council is under Ministry of Commerce and Industry, and the Environment and Climate Action Group of NPC was set up in early 80s. And since then, you've been providing services in the area of environment management, sustainable development. And we are the pioneer in the area of waste minimization, in which we work with many MSMEs. And with regard to ESG BRSR, we have been helping companies, corporates, PSUs to prepare their BRSR reports, development of SOPs, policies, etc. And we have dedicated ESG cell in our group, which provides such services. So thank you so much.
Thank you so much, Mr. Bhardwaj. And now I'm going to go through the questions. And may I start with Mr. Sanjeev Bhatia? There are 3 questions that I'm going to ask you. Perhaps you may want to combine some of the answers. Technology, how can they be leveraged to collect data and measure Scope 3 emissions? And what is the kind of approaches that organizations need to take to collect all this data? What is the role of firms such as yours in moving this needle on Scope 3 emissions forward? Over to you, Mr. Sanjeev.
Thanks, Bhaskar. That's quite a lot of questions. And I think these are pretty wide questions. So let me first check, Bhaskar, how much time do we have so that I can kind of keep it within that. You're unmuted.
Say that if each one takes, yeah, is it okay? Can you hear now, Sanjeev?
Yeah, I can.
Yeah, I would say if each participant takes about 5 minutes for the total 3 questions, I think then we are good to go. We'll have a little more time at the end for questions and discussions. Over to you.
Thanks, Bhaskar. So what I'll do is I'll come to the technology piece a little later. Let me just pick up the piece about what approaches, let's say, organizations can take to engage with suppliers. And I'd like to go back to my own experience. So I used to work with a British MNC for many years till about 2010 before we set up our own consulting firm. And many of those years were spent in Asia. So I used to head a business in China. And we were tier 1 and tier 2 suppliers to large brands. And at those days, the textile brands like Marks and Spencer, Adidas were at the forefront of the sustainability movement, let's say, in corporates. And Marks and Spencer had just announced Plan A, which was probably the first plan that a corporate came out, outlining sustainability initiatives. But my memory of that time is that one of the world's largest retailers called their tier 1, tier 2 suppliers for a conference, and we were one of those. And it was titled as Improving Energy Efficiency in Supply Chain in those days, and decarbonization. So it was great, all excited, all went there, had a whole days of discussions. And towards the end, this big retailer summarized it by saying, so after all of this, we expect about 7 or 8% reduction in energy consumption with all you suppliers. And therefore, please factor that in your pricing going forward to us. Now, when we always talk about this question about what does big organizations do, I think the first thing they have to do is realize that they need to be very fair with their suppliers and participants if they really want reductions in Scope 3 emissions. Because the tendency for the big organizations is that there is a business case to this, so there are savings, and which is really true. And so let me pull those out. And that's where most actions fail and most suppliers don't take interest. Globally, there are about 15 to 16,000 large companies. So in other words, there's 16,000, value chains, I would say. And in India, maybe 2,000 large companies. Now, if these 16,000 or 15,000 large value chains, or in India, 2,000 take action, there can be a dramatic reduction in scope 3 emissions. But this is only possible if this fair issue happens. Another issue that we come up, and like I said, we work with 1,500 SMEs now, many of whom are part of export value chain. So in textile, automotive component, a dilemma faced by suppliers is that, I'm a supplier, tier 1 supplier, and I supply to 6 big brands. Now, how do I account for my scope 3 emissions when A brand is asking me, and B brand is asking me, and C brand is asking me for these details? Do I prorata it? How do I track it by production? It's not very easy. It's a very, very big challenge. And this is where we notice most of the times, even when consulting firms work with SMEs, they take shortcuts and you don't really get the right answers. So it all seems to work very well when you are just working for one customer, data is easily available. So this is where I find technology can also come into play. But I think the way we are approaching this is that we are taking a hybrid approach. So we are not believing that technology alone can solve the problem. There are thousands and thousands of data points to sort out. But equally, we feel that the human insight of making the right interpretations, particularly when it comes to the solutioning side. So one is the inventorization. You do the inventorization, which is one task. The second task is how am I going to actually reduce my inventory? How am I going to do? And that's where the human insight becomes very important. But just to the technology side, if some of you may be aware or not, one of the big platforms that got created a few years back, and I think got launched in 21, was by Salesforce. Salesforce actually created it for their own scope 3 inventory. And they created this one big solution which is being rolled out. SAP has a very big solution. So at one end, you have large enterprise solutions now. We just did a check in Europe based, as a result of the new reporting, the European Sustainability Reporting Initiative, which is requiring reporting on over 1,200 data points. So, BRSR seems a very limited, small set when you compare to what Europe is coming out with. And we realized now, at the last scan we did, there were over 6,000 software solutions available for that. That's a huge number. So as a supplier or a company, you don't even know which one will work, which doesn't work. So that's going to be another dilemma. But the biggest use we see of technology in this is actually where the supporting documents can be transparently and in a very traceable manner kept and used by either the auditors or by external verifiers or by the company itself. So there is nobody's able to tamper the data, and there's always one single truth that is always used. So I think, Bhaskar, I'll leave it at that. I'm sure there'll be some questions later on. I can dwell into that. But I also want to just share one data point for some of you, because we are talking about this. This is a textile company that we worked with about a year back, just for the viewers to understand what can be the ratio of scope 3. So in this particular case, the total scope 1, 2, and 3 emissions, and for scope 3, we only took 4 categories. So not all the categories, but 4 big categories. So for this company, the annual emission in CO2 equivalent was 46,000 tons. And out of that, the scope 3 was 36,000 tons, just to give you the number. So 36,000 tons versus 46,000 tons. And the large part of this 36,000 tons was raw material. So one very easy answer to give as a consulting firm to someone in textile is shift to recycled yarns. And now you come with another problem. Is there enough supply of recycled yarns? So you have a solution with you, but you don't have a full answer because there is not enough production of those recycled yarns. And that's another challenge when companies will face when they try to, having done the GHG inventorization, they try to find solutions to reduce that inventory. Yeah, with that, back to you, Bhaskar.
Yeah, thanks a lot for that. I think the two important points about traceability and the quantum of scope 3 is something that's very important. I'm now going to go to Mr. Aditya from Siemens, and we would like you to share some examples of how Scope 3 emissions are being addressed by Siemens through the use of advanced technology? And also in the context of CBAM, how is the company working with your Scope 3 suppliers in terms of trying to address Scope 3 emissions? Over to you, Mr. Aditya.
Okay, thank you for that, Bhaskar. So I think my response will be perhaps a mix of both questions together in many ways. They do commingle quite actively, and I hope that's okay. First, a bit of a context about Siemens. So Siemens has about 67,000 suppliers globally. We source about 37 billion euros worth of goods and services from about 140 countries. You have the usual suspects amongst them: India, China, the US, Mexico, etc. But you also have a variety of different countries with different regulatory regimes and a very, shall I say, a range of maturity of manufacturing bases across the board, whether in Eastern Europe, whether in Africa, whether in the Middle East, etc. As you can imagine, that managing such a complex supply chain is a challenge for us. We've set fairly aggressive targets for Scope 3 as it stands right now. We broadly said that, look, we want to commit to a 20% emission reduction in Scope 3 by 2030. We'd like to phase it out completely to the tune of 100% by 2050, but right now at least 20% we want to target by 2030 itself. In terms of how we've been able to use advanced technology to be able to tackle this challenge of reducing emissions from Scope 3, I can talk about a couple of elements as they stand. Firstly, for across the board with our suppliers, we're working very closely with them to really understand the nature of the problem. How much emissions do they have from Scope 3? What is the nature of those emissions? Is it a mix primarily of Scope 1 and Scope 2 of the particular supplier, or are the emissions really concentrated more at a Tier 2, Tier 3, or even a Tier 4 level with respect to suppliers themselves? Through our own experience, we've realized trying to chase down suppliers to gather this data is a very complex ask. I heard one of the speakers previously talk about a range of solutions that can perhaps make this task easier. We've developed our own as well in-house to try and make this a bit more easier. But what we've really realized quite early on is that it's important to get everyone on the same platform so that you can really start aggregating data quickly, so that everyone is really reporting in the same kind of formats. And then you can really try and see how you can get up the ladder with respect to improving the methodology for Scope 3, as well as the accuracy and the comprehensiveness of the coverage that you have. Now, once we have a sense of what our supply chain really looks at with respect to Scope 3 emissions, we've worked very closely with numerous suppliers to help them really reduce their carbon dioxide emissions as well, and equivalents as well. So we work with about 4,300 suppliers, helping them through various different applications of technologies, most of that being homegrown solutions that we ourselves use, to lead to about a 9% average reduction of carbon dioxide footprint across the board. Now, technological solutions really come in multiple dimensions for this. There is the process side, where digitalization really comes into play. So utilizing solutions that help you in some ways digitally simulate what's happening within your production plant can help you understand exactly where the process can be optimized with respect to energy consumption, as well as with respect to raw material consumption. Bringing many of our suppliers on board digital twin platforms with respect to the product, with respect to the process, as well as their buildings, has been a key ask for us from day one along these initiatives. The second is really on the electrification side. We've been helping many of our suppliers, boost out their electric vehicle charging infrastructure, help them with utilizing industrial automation solutions that can really contribute to a lower carbon footprint for them, as opposed to using something that is more fossil fuel emitting. Beyond that, we've also utilized a full range of energy efficient products and solutions. Now, these can really be focused on your utilities side. For example, looking at your chillers, your boilers, your AHUs, trying to optimize them on the supply side, or something a bit more radical as well. So taking your coal-based boiler and really replacing it completely end-to-end with a biomass-based one, depending on whether you have supply of biomass in your local market. And then finally, there's also the renewable energy integration side. We have a partnership with Tata Power. We've offered that the fruits of that partnership with respect to access to renewable power to our suppliers as well. We're working with our suppliers to help integrate any existing isolated renewable infrastructure that they already have with the grid, as well as with their existing facilities. We've offered them solutions that range from grid stabilization systems to energy storage solutions. Those can come in battery storage, those can come in compressed air storage across the board so that they can have a reliable and a sustainable power supply. Now, all of these really can help clients as well as suppliers reduce their carbon emissions as they stand. I'll talk a bit more about just two more topics. Firstly, there's also working with our suppliers to redesign our products as they stand. So helping to think about how do I, from a mass balance approach, how do I reduce the kind of raw materials that I'm bringing into a particular product. And I'll talk about a very specific example that we've had. We have circuit breakers that are manufactured primarily for the low voltage transformation use case. We've worked very closely with BASF to source biomethane that is used to manufacture sustainable plastic that goes into manufacturing the housing of that circuit breaker. Now, by bringing that in, we were able to essentially reduce the emissions to the tune of 150 tons per product on an annualized basis. Now, these are examples of how you can start really thinking along those lines as well, by looking at a circular design mindset, by looking at what kind of recycled parts you can bring in, and really fostering those relationships with your suppliers downstream. And then finally, I heard the question talking about CBAM itself. Now, the CBAM itself is evolving, the deadlines are shifting, the nature of the regulations as it stands is changing. As we understand it, it's really focused more on specific sectors as they stand right now. But having said that, we're making our own proactive preparation to really focus on this, specifically with regards to our exports from India, as well as other locations to Europe. As I've mentioned before, we're firstly starting off with a carbon footprint assessment, really understanding what the nature of our products is. Secondly, really investing in technology across our supply chain so that those emissions can be reduced. And then finally, really working very closely with our suppliers so that they can reduce their carbon emissions, report them using our innovative eco-label labeling system, as well as implementing sustainable practices. I hope that's answered your question to a certain extent, but happy to take queries further on.
Yes, it did. Thank you so much. And 67,000 suppliers is some number. I can't even imagine how large that's going to be. But the BASF example was a classic example of how you really get into product engineering to reduce the carbon emissions. We'll come back to all these in a little while. I'm now going to ask Sarika Gusain from Forbes Mazars. The questions that we would like you to address, Madam, is in terms of common challenges in accounting and reporting as far as Scope 3 emissions are concerned. And what is the kind of regulatory push for the SMEs globally and in India for Scope 3 emissions? And lastly, how are you working with your clients to build a better transparency and accountability for Scope 3 emissions? Over to you, Ms. Sarika.
Yes, sir. So I just need your permission to share my screen if that is visible.
Yeah, it is visible.
Yeah, so I'm always been a fan of using presentations for a very concentrated discussion. So I would not take much time just because I am leading the discussion with presentation, but just to have a better understanding of all regulatory push, what we can discuss, just thought to share my views in the form of a presentation. So if we look at and we understand, India is quite heavily regulated. So as we know that, we do not start working unless there is a mandate from any of the regulators or throughout the supply chain or, a similar mandate just to run a business or to expand a business. Therefore, scope 3 is also not away from that regulatory mandate now. There are a lot of pushes in terms of regulatory measures or India specific items, etc. So in terms of the regulatory push, it is largely coming from the Paris Agreement. As all of us know, global warming, to the tune of 1.5 centigrade is something which everybody has to limit. And therefore, scope 3 emission is also coming out of that. If we move to another aspect of it, financial reporting standards through various jurisdictions is something which is urging every company to, report scope 3 and then take a road to net zero as well. So TCFD is something which we know now. It has been subsumed in IFRS S1 and S2, which is a new set of standards which is globally recognized. Some of the countries have adopted the same. It also indirectly mandates the company to calculate scope 3 emissions and report as part of their entire overall risk, climate risk management. CDP is something, again, another framework which requires a scope 3 emission to be calculated as part of the broader sustainability reporting framework of the company, involving the entire supply chain. As I just mentioned, IFRS S2 is a new standard by ISSB. It also plays a very important role focusing on scope 3 emissions, which pushes the companies to reduce their carbon footprints and take the net zero target of the companies as well, which is also aligned with the Paris Agreement. If I move ahead, another country-specific regulations which mandate the company, and that on the top it comes CSRD, which is a new regulation in the European Unions, and it also mandated not only scope 1, 2, but 3 throughout its supply chain, which is also encouraging companies to calculate scope 3 emissions. CSDD is something which is a part of European Green Deal, which is also establishes the corporate sustainability due diligence, which requires the company to address the negative impacts of human rights and environment across all the 3 categories of emissions, including scope 3. CBAM is something which has been spoken a lot, so I would not spend much time, but just for the benefit of those who are not very new to CBAM, it is something sort of a tariff which is based on the carbon footprints generated by any part of the globe, and those items are being imported to EU to incentivize those companies sitting in EU to globally decarbonize their supply chain and remain competitive. United States, there is a recent act which has been passed, which is Climate Corporate Data Accountability Act, that also requires companies to calculate and report scope 3 emissions, and which has some threshold in terms of the annual revenue. Now, there is a lot of thirst from the entire supply chain of the entire ecosystem of the company, largely in manufacturing entities like auto, tech, retail, which is embedded in their net zero journey. And therefore, a lot of pressure upstream and downstream is coming on MSMEs and other segments of the entire value chain system. Next, if we talk about India-specific regulation, BRSR is something which is now majorly known by everybody. Top 1,000 companies based on market cap are required to calculate for past 2 years. Scope 1 and 2. Scope 3 is still voluntary in nature, but if we pick up the data from financial year 2023, out of top 100 companies, 51 companies had reported and disclosed scope 3. I would not say that those data were accurate, complete, and reported in all the 15 categories, but they attempted to create the entire ecosystem of scope 3 emission, which is a very good move. I'm hoping that with the time to come, I'm sure the improvisation would happen in those companies, and other companies will be new entrants in reporting scope 3 data. extended producer responsibility, which is also part, which is being reported in BRSR itself, which places a significant responsibility on the producers for end of life impact of their product, also indirectly covers the scope 3 emissions, and therefore indirectly or directly urging the companies to report scope 3. NAPCC, everybody knows it, is a pledge into 8 different sectors, wherein we are committed to become net zero by 2070. And with the development of sector-specific decarbonization roadmap, we are likely to include scope 3 emissions very soon. Similarly, decarbonization push comes from various other schemes like ETS, which is carbon pricing, and cap and trade system, which indirectly encourages companies, including all set of MSMEs, to reduce their scope 3 emissions to avoid the financial implications on them. There are indirect financial incentives also, wherein financial institutions are tying up with companies, industries, and corporates, prioritizing green loans, sustainability linked bonds, ESG compliant funding, and incentivizing companies in various means to adopt scope 3 decarbonization practices as well. There is a client of mine who is getting the interest rate reduction as soon as they are reducing their entire carbon footprint in the spend manner. So over to you, sir. I think I addressed the query in terms of the regulatory push, and then, more than happy to address any other question which comes up.
We will come back to the question of challenges. I know that this has been addressed by a couple of others, but we will probably come back. I'm now going to move to Mr. Indrajit Shaw in terms of the real estate sector, which provides a different challenge altogether in terms of the data collection and measurement challenges as far as the real estate sector is concerned for tracking scope 3 emissions. And what really are the measures that the real estate sector is taking for the scope 3 emissions in terms of containing them? Over to you, Mr. Shaw.
Thank you, Mr. Bhaskar. So I think, what I'll start off with is giving a little bit of context in terms of the role that real estate plays in emissions. So globally, what we see is the built environment sector contributes to close to 40% of global emissions. Now, what that means is essentially every company that is either building the buildings or are occupying those buildings have a responsibility to reduce the emissions, right? One of the key challenges that we see companies coming to us with is an understanding of how do we apportion scope 3 emissions. If I am a tenant in a commercial building, then how do I apportion emissions? If I am a developer, then how do I do that, right? So I wanted to start with some basics in terms of understanding how that works. First of all, for both parties, they need to look at the kind of lease that is designed. Either it will be a finance or capital lease, which is, where the lessee has the right to operate the asset and also owns all the risks and rewards. And typically, this will be recorded for in the balance sheet, or it will be an operating lease where the lessee will operate the asset like a building, but does not own the risks or rewards, right? Once this is determined, then we look at from the greenhouse gas protocol perspective, whether the reporting company, be it the lessee, which is taking the rent, or the lessor, which is giving the rent, giving the building for rent. Then we look at what is the operational or financial control approach as per the greenhouse gas protocol that the company is taking, right? Now, based on these two factors, the kind of lease and the kind of reporting control approach that is taken for reporting, we have 4 options where the leasing is in the form of financial control, right? Irrespective of the reporting approach, right?
the lessee company, the company which is taking the lease, will associate all the emissions as its scope 1 or 2, as if it owned the building itself. However, in the situation where it is an operating lease, but the control format for reporting is equity share, in that space, the lessee company will report it as a scope 3 emission. And this scenario is exactly reversed in the case of the developer. So that's one part in terms of apportionment. Coming to the data collection and measurement challenges. One of the biggest issues that we see with most of our clients is a lack of clarity in understanding what constitutes scope 3, right? Now, as per the greenhouse gas protocol, we have got 15 categories of scope 3, 8 upstream and 7 downstream. Upstream means before the product has been sold. Downstream means after the product is sold. Now, within this space of upstream and downstream, what we see is in upstream category, the purchased goods and services is one of the largest categories which can contribute to almost 50% of the overall scope 3 emissions. And here we at CBRE have actually got a solution where we help our clients and their suppliers first evaluate their current status. And this comes to the measurement aspect, Mr. Bhaskar, where we help those companies and those suppliers first go through something called an EcoVadis assessment, right? EcoVadis is a global organization which helps specifically suppliers assess their current status of ESG readiness. Now, once that is done, they are given a score and an understanding of what are the specific areas where they can improve. Once this understanding comes in, we then work with these client suppliers to help them understand what data to measure. And this is where the understanding of these upstream and downstream emission comes in. So first, we will have to identify of these 15 categories, what are the major ones. What we see typically are out of the, let's say, upstream categories, we see purchased goods and services, capital goods, sometimes waste generated in operations, depending on the company, employee travel and business travel as the key areas that most companies focus on. In terms of downstream, we see the end of life treatment as one of the key areas that organizations want to focus on. So once this is understood, and this assessment can be done by first looking at all the products or services that you are creating for your customers. So I'll go back to what Mr. Sanjeev mentioned earlier. When you are an SME and you are working with multiple customers, the first thing you have to do is evaluate your entire carbon footprint. Okay, for all the products and services that you are providing, what is your emission for this entire process? Then you do an apportionment, and there are multiple ways to do that, on how you will allocate a certain amount of emission to a particular client. Now, there are 2 or 3 ways to do that. One, which is the ideal way to do it, is called life cycle assessment. So you will look at each product or service that you provide. You will do an assessment starting from when that product or service originated. In case of product, it could be when the raw materials were mined to when the final product was disposed of. Okay. In case of services, it will be when you decided to design the service to the point where your engagement for that service closes, right? Once you have identified this entire what we call cradle to grave approach, you will then look at 2 or 3 methods to apportion this. One could be that for those particular products or services and the quantity that you're providing, if you do an LCA, then you'll know exactly how much emission to allocate to company A, B, and C, who are your customers. But most companies will not have the resources to do a LCA. So what the second approach, what most companies use, is a cost-based approach. So if I have business dealings with A, B, and C, and the dollar value is $100, $200, and $300 worth of transactions, then my emissions will also be in that ratio, 1:2:3. Now, this method, while it is easy to do and globally almost 94% companies use this, has an inherent fallacy that if there are sustainability mechanisms that you're building into the system, then those may or may not be accounted for because you are only basing it on the dollar value. So the third approach, which is in between the LCA and the cost-based approach, is a hybrid approach where you will look at the cost that the transaction that you have with each company. Then you will factor in the product specific, or in the absence of product specific, there are industry guidelines for product groups that you can use to proportion the emission factor for the key products. And then you use a combination methodology to assign what is the final value for each client. So this is the typical approach that we suggest our clients and their suppliers to go through. But what I've explained to you in the last 5 minutes is probably a multi-year process, because typically companies will first need to understand their basics, look at their product services, evaluate the footprint, assign the methodology, and then start to collect data, analyze, and finally a proportion. However, what I would suggest is, at the very basic, please first understand what is the overall emission of your organization from a scope 1, 2, and 3 perspective, and then take it from there. The last bit that I wanted to mention in terms of what companies can do for builders, I would say one of the key challenges that I see, not just in India, but globally, is we tend to cater as builders, the clients tend to cater to their customers' demands. Often what happens is, while in India, we live in a tropical country, because certain clients would want, for aesthetic purposes, buildings with a huge glass facade, you build that in. Now, what you have done is, you've created a glass house where a lot of heat comes in, increases the amount of heat that is stored in the building, and then you have to get in a higher capacity cooling system to reduce that. And then you will go for additional certifications to make sure that the building is efficient. Much more effective would be if you built the buildings at the starting to make sure that their embedded emissions, the materials that go into the building and the equipment that we are using, is efficient from a carbon emissions perspective, and then make sure that the operations of that building is done in a carbon efficient manner. So that is from the builder's perspective. From a tenant's perspective, I think it is important to understand that while glass might look good, it is neither good for your employees because there is a lot more sun coming in, nor is it good for your business because you have to pay more energy costs. So therefore, it would make more sense that the buildings are suited to the geography they are built in. And therefore, tenants must insist to builders to build buildings in a way which are efficient from a carbon perspective, also is efficient to operate from an energy, water, and waste perspective. One other piece that tenants can also look at is the biodiversity element, where you can insist on getting species of plants, because often we see large campuses which are rented out, so that that itself will help you in reducing the carbon emissions of the entire campus. The last bit is around ensuring that you're getting renewable energy for your entire campus so that your scope 1 and 2 emissions are taken care of. Whatever is left in terms of your supply chain emissions can then be evaluated using the mechanism that I mentioned earlier. I hope this has given a broad understanding of how organizations, whether as builders or as people who are renting out companies or as suppliers could look at their scope 3 emissions and reduce it. Back to you, Mr. Bhaskar.
Yeah. Thank you so much, Mr. Indrajit. That was indeed very detailed, and I'm hoping that all the participants got the full complexity of whatever you have explained. I'm sure there will be questions on this as we go along. Before I ask Ms. Shama Jain to respond to some of the questions, I'm going to request all the participants to ensure that all their questions are listed either in the Q&A box or the chat box. And in case you wish to address it to any special panelist, please indicate so, and then we will be able to move on. Now for Ms. Shama Jain, Hindustan Zinc has been a great pioneer in more ways than one. Now, how has Hindustan Zinc really approached Scope 3 emissions in terms of going down the supply chain? And what is the kind of collaboration that you've had with suppliers and downstream partners to reduce Scope 3 emissions? Over to you, Ms. Shama Jain.
Thank you. Thank you, Mr. Bhaskar. And indeed, I am listening to all the panelists who are sharing their great insights. And because I being with a sector which is already known as an energy intensive sector, and I would like to respond this question in two ways, because scope 3 is not just that easy as we calculate the scope 1 and 2, because that is something which is having the direct control on that. But scope 3 is something which is a wider scope. So I think because we are in a sector, if we really wanted to be a decarbonized sector in that sense, I think it's very important to have a deep understanding of the emissions across all the level, be it scope 1, be it scope 3, or be it scope 2 and scope 3. So I would like to respond the question in two ways. I would like to discuss on the challenges also, because it's not that easy, as I said earlier as well. And also, what are the actions that as an organization, Hindustan Zinc is taking to move forward in the direction of the scope 3 emissions calculations and connecting with the various value chain and the multiple stakeholders who are involved in this process. So I think the foremost is that, how we, for the calculations of this scope 3, it's a very tedious task. It's the often contributing to the major portion of the company's overall GHG emission, but really, really hard to track. And maybe because of the complex value chain which is involved, and also the multiple stakeholders who are involved into that. So I think the foremost challenge that every company is facing is that getting the accurate data from the suppliers or the stakeholder throughout the value chain. And I think when we start and talk about the scope 3 emission, it starts with the raw material, its origin, it's the transportation to your place. And when we look at the downstream, how your product reaches to the customer and its first use, the disposal, the end of life. So it's a complex system which is it's really hard to obtain that accurate data from the suppliers and the stakeholders. The second challenge, I would say, is the lack of transparency and the standardization, because mostly the data that we calculate for the scope 3, we actually rely on the secondary data, because the primary data is not available for the large section. If I talk about the category 1, which is purchase goods and services, so there is also, I don't think so, there is availability of the primary data in terms of a lot of large section of the purchase goods that we be it lime, be it cement, be it any kind of a machinery, electronic goods, a lot things are there. But I don't think so that there is a second primary data which is available. And primary data, when I say, it's like the emission, the correct emission factors which are available to us. So that is also causing a lot of challenge for companies to report on the scope 3 emissions. When I talk about the third, which is also could be like, when we look at the India specific emission factors, because now the emissions factors of DEFRA, which is available, the IPCC factors which are available, the US, the extended input-output EPA based emission factors which are available, but I don't think so that they are in alignment with the India specific or the Indian products or so. So I think these are the basic challenges which not just the Hindustan Zinc, I think this is the challenge which each and every companies are facing. And I think the more deep and deep we go into we develop the more insights into the scope 3 emissions, I think that will give us the more accurate results as well. If I would like to share I definitely would like to share the example of Hindustan Zinc, wherein, we used to report the scope 3 as 4 million tons, which is equivalent to our scope 1 and 2 itself. But when we started the process of validating our targets with the SBTI, and then we developed the more understanding around it, and we revised our calculation methodology. And now this calculation methodology is also aligned with the International Zinc Association. They have their, with them, we worked on the scope 3 emission framework. And now with that alignment, we are reporting 1.6 million. So earlier we used to report on category 12 also, but now with the more understanding that has developed around, so now that category is not that much relevant to our company, because we are not a B2, we are into a B2B company, so that's why that's not much relevant category for us to report. So I think my only suggestion to everybody who is here, the more understanding around the GHG protocol, the more you would like to, know on the more you understand on the scope 3, each of the category, the more understanding will develop, and then you can definitely come up with the accurate data that can be reported in the public domain. And when I talk about the decarbonization into the value chain, that how Hindustan Zinc is approaching on that decarbonization in its value chain, and I definitely say the decarbonization journey for our direct operation is very, very clear. The 90% of our emissions comes from the captive power plant. So if we transition towards the renewable energy, most of my, the 90% of my direct emissions or the scope 1, scope 2 is going to get reduced. We already moved a path ahead into that. We have already signed the PDA agreements of 450 megawatt or so. And as I said earlier also, that we become the first company in India to deploy the battery operating electrical vehicles into that. And the journey is very, very clear for the direct operations. But when we talk about the scope 3, it's really hard to say that, these are the areas, which are the categories I'm going to reduce with the support of my value chain. So till now, out of this 15 categories, we identified as 11 categories. And for each of the categories, we are working with the value chain partners. And the strategy that we follow is the 3E strategy. The one strategy is engagement with the supply chain. We are doing the risk assessment basis the publicly available tools and identifying their impact, their dependencies, their climate change risk, and then we connect with them on their ESG related goals, not just limited to the climate change. But yes, we are also trying to understand that, how their goals are aligned to our goals, or the Paris Agreement, or the net zero goals, or them. Apart from this, we are also engaging with them if there is MSMEs which are there, which is not having that kind of an, we are trying to provide the trainings. We have an initiative called Wednesdays for Transition. So each Wednesday we are connecting with them. We are providing a lot of trainings to them with respect to the GHG calculations, the climate change risk assessment, what are the tools that need to be used. So likewise, we are connecting with that. So that forms a first E of our entire engagement journey with the value chain, that is engaging with the value chain partners. Now, the second E that comes is evaluation. So how we are doing the evaluation of our suppliers. So there, I think we are having, the ESG expectations are is a part of our procurement, that's right from the pre-qualification of that supplier to the time they are working with us, the due diligence and everything. We are trying to connect with them. We are trying to obtain the data from their GHG emissions or so. So that's formed the second part of our E, wherein we are trying to evaluate our suppliers, and we are working on one of the framework basis the product life cycle for the 15 major commodities that we are starting with. But yes, we are trying to include the carbon emission as part of our buying decisions as well. So this is how the second E, which is evaluation that comes in. The third E, which is a very, very important part of this entire journey of the decarbonization in the value chain, and that E is the evolving. How we are connecting with our suppliers, or how we are connecting with our logistic partners, how we are connecting with our business partners. Like very recently, we have, this signed an MOU with one of the companies to provide the LNG vehicles to us. We have now deployed around 180 LNG vehicles for the transportation of our inter-unit transportation and for the finished good movement. I mean, the product that is going from our end to the customer end. So that movement is either through the LNG vehicles or through the electrical vehicles that is there. So that's why we are catering directly the reduction in the category 4, which is upstream transportation and distribution, and also the category 9, which is downstream transportation and distribution. So I think in that way, I would say that, I mean, I tried to cover that what are the challenges as an organization that we are facing, and also I tried to cover that how as an organization we are connecting with the suppliers, we are connecting with the stakeholders who are involved into the value chains. And earlier the speaker has talked about the EPDs as well. So as in Hindustan Zinc, we under the product category of infrastructures, we have also come up with the environmental product declaration, which is a cradle to gate emissions, and we are clearly giving the emissions performance of our throughout the life cycle of the production of the zinc. So we are providing that to our customers as well, so that looking at the EPDs which we have provided, they can also in turn look at that, what are the things they can have in their scope 3 and how they can reduce their scope 3. And also we have recently launched a product which is a low carbon product, which is an EcoZen that we have, and that's Asia's first low carbon zinc that we have produced for our customers. So we are not just looking at decarbonizing our scope 1, scope 2, our direct operations. We are also looking at that, how customers can reduce their scope 3 emissions by using our low carbon product. So EcoZen is one such product which is having less than 1 ton of carbon emission per ton of production. So I think in that way, we are trying to connect with our value chain partners. We are trying to report on, I mean, we have already submitted the scope 3 emissions for the 11 categories for the CDP response as well, the BRSR and the sustainability report as well. And that's all the assured data that we have reported in the public domain. But I think all these exercise gives us a huge opportunity as well. It's not just a challenge or meeting the regulatory requirement, but I think it's a huge opportunity also that, how we can, maybe some of these initiatives can help us in cost saving in the long run as well. But with all these initiatives, we remain competitive in this carbon this low carbon world. Yeah, that's all from my side. I will be happy to answer.
Thank you so much, Ms. Sharma. And I know, Mr. Bhardwaj, you've been patiently waiting. There is so much that people have to say that it is indeed a challenge to contain it in about 5 minutes that I had asked for. So, Mr. Bhardwaj, two main points I'd like you to address. One is in terms of what is NPC doing to help the SMEs in trying to look at the decarbonization and scope 3 emissions. And the other important question is, are there any kind of policy prescriptions that if they are taken note of, would help the SMEs in moving forward on scope 3 emissions? Over to you, Mr. Bhardwaj.
Thank you so much. Just a minute. Thank you so much. Let me share my slides to make it quick.
Yeah.
I cannot see actually. I cannot see. Vipin, can you share my slides from there?
Vipin?
Yeah, sure, sir. Sure, sir.
Please,
Sure, sure.
I don't know why it's open, but it's not coming on the screen.
Give me a second, please.
Sorry for that.
So just allow us some minutes.
Yes, so let me just briefly start with what NPC has been doing in this area. As I already explained to you that NPC has a dedicated ESG cell, and we help companies to develop ESG and BRSR report, and also developing templates and SOPs for the reporting of GHG emissions, be it scope 1, scope 2. Scope 3 we have discussed a lot, but let me start with first Indian BRSR. SEBI has come up with the BRSR core based on which ratings will be done. And BRSR core, yes, next slide, Vipin. BRSR core does not talk about scope 3. BRSR core talks about only scope 1 and scope 2. However, along with the BRSR core, the corporates have been advised to also report the, yes, next slide. Yes, so these top 250 companies have to start reporting about their value chain from this year, then top 500 companies from the next year, next financial year, and top 1,000 from the 26-27. And you can see the value chain that they have to include in the reporting of GHG emissions is comprising of 75% of its purchase, that is the upstream, and 75% of sales, that is downstream. So those supply chain has to be covered in terms of reporting. Now, listed entities shall report the KPIs in BRSR core for the value chain. So again, for the value chain, the focus is on scope 1 and scope 2, which becomes scope 3 for the industry, for the corporate. So that's how they are reporting. But as such, in BRSR core, the energy intensity, GHG emission intensity will be calculated based on the scope 1 and scope 2 only. And again, the provision applicable on comply or explain basis. If they are not able to report entirely entire value chain, then they can explain, they can give reasons why they are not able to report. So it's again, it's not mandatory. So once again, BRSR core is focusing on scope 1 and scope 2, but because reporting for their value chain is now becoming mandatory for top 250 companies, so they will be required to report the scope 1 and scope 2 of their value chain. Next. Okay. So under CBAM, see, CBAM refers to embedded emissions. What is embedded emissions? It is not scope 3 emissions. That's why they use this terminology, embedded emissions, and it's defined. That's a direct greenhouse gas emissions from the manufacturing of goods, calculated according to methods, so and so annexure. Direct emissions are those generated from the activities of a manufacturer owns or controls. So if someone is exporting any product from here, so the only scope 1 and scope 2 will be covered in embedded emissions, not scope 3 at this stage. This is about CBAM. Coming to the European Union's emission trading scheme and Indian carbon market, look at the parameters they are covering. See, EU ETS, European Union emission trading scheme covers only CO2, carbon dioxide, only carbon dioxide, not all GHGs, nitrous oxide and PFCs, that's all. So there is no scope 3. It's again scope 1 and scope 2 only. Indian carbon market covers only 2, CO2 and PFCs. And look at the what it's mentioned. The evaluation will cover direct energy process and indirect energy emissions within gate-to-gate boundary. So even carbon markets, well, be it India or EU, does not cover scope 3 at this stage. Quickly to the next slide. It was referred about scope 3, the detailed guidelines are available in GHG protocol. And we heard again and again that there are 15 categories. So the top 2 categories, 1 and 2, purchase of goods and services, that is upstream, capital goods upstream, and then downstream, like this, there are 15 categories. Waste generated in operations, business travels, that is covered in scope, downstream, but scope 3. So guidelines are available, but none of the country, nowhere, maybe few organizations may be completing it, but nowhere it's being mandated to make it compulsory to report scope 3 so far. So we have enough time. Now NPC, as I already explained, that we provide complete handholding support to the MSMEs, corporates. We have a 7-step ESG solution. We help preparation of SOPs and data formats, training, and of course we certify energy auditors and energy managers in the country who can actually help in reporting. Now coming to the what should be done for scope 3 emissions. See, based on my experience, our experience, NPC's experience, even scope 1 and scope 2 reporting is not accurate at this stage, be it corporates, be it PSUs. So first we have to focus on scope 1 and scope 2. And of course, scope 3 of a company A is scope 1 and 2 for its value chain. So when say Hindustan Zinc has to report about scope 3, it's a scope 1 and 2 of value chain only. So we have to strengthen and systemize scope 1 and 2 reporting of MSMEs. Because their scope 1 and 2 will become scope 3 of company to whom they are supplying. Now coming to SEBI, SEBI talks about the value chain coverage in the reporting by the companies. But again, let me tell you, value chain means MSMEs. MSMEs are not controlled by SEBI. MSMEs are controlled by the pollution control boards in terms of environment, and they don't seek any GHG emission reporting. So this focus has to come from corporates only, because SEBI doesn't interact with MSMEs directly. So they have asked corporates to report the value chain emissions. Now scope 3 of value chain, nowhere it's mentioned that scope 3 of value chain will be reported by company A. It's only scope 1 and 2. Now look at the US CPA. See, even US CPA, out of those 15 categories under GHG protocol, they have also come up with this 3-step solution. Number 1, entry-level reporting. That means you can choose out of this 15, 1 or 2 categories and start reporting, entry level. So it's allowed officially. Then comes intermediate. You choose some more categories out of 15. And then advanced, you report all. So again, even in USA, it is not mandatory. There's entry level, there's intermediate level, there's advanced level. And as I told you that these MSMEs value chains are not controlled by SEBI directly, and pollution boards do not ask for GHG reporting. So then who can force, who can encourage, who can help this MSME supply chain corporates? So top-down approach, like Hindustan Zinc mentioned, AEEE approach. So some approach have to be adopted by corporates to encourage their value chain to start reporting scope 1 and scope 2. Of course, bottom-up approach, capacity building programs at the cluster level to help MSMEs to start reporting. We can start national and state level ESG awards for MSMEs, so they become more aware. They start collecting data. Again, I tell you, I have worked with the corporates, and even in corporates, data reporting is not accurate. So forget about MSMEs. Then, of course, we can also carry out ESG readiness certification of MSMEs as a part of value chain of corporates. And under the scheme or RAMP, that is the MSME scheme, $500 million US scheme, in this greening initiatives are also covered. Raising and accelerating MSME performance, RAMP scheme. So under that, direct through state governments, you can get the support for MSMEs to bring their initiatives. So this can be done to start better reporting scope 3 emissions. Thank you so much.
Yeah, thank you so much, Mr. Bhardwaj. And I don't see too many questions in the chat box or in this thing. Vipin, are you able to see any questions? Are there any specific questions for the panelists? Yeah, go ahead.
Sir, we have. Yeah, just a second.
Yeah, why don't you read it out and address it to the panel? I know we are running a little bit beyond time, but go ahead, Vipin.
Yeah, so first question marked to Sarika ma'am. Question is from Mr. Ranjan. He asked, in a OEM and Tier 1 value chain, reporting of upstream and downstream CO2 emission may lead to double accounting at a country level. This is a general notion I usually come across. Kindly correct.
Exactly, it is not so. The scope 1 and 2 of one person in the entire supply chain has to become scope 3 emission for the other person in the entire supply chain. You can think of two reporting cards of the entire ecosystem where two different organizations are making some declaration either as a scope 1 or 2 or a scope 3. So it is actually a myth. It is not so. It is no double accounting. Double accounting at times happen when one company who is working with multiple suppliers and they have to provide their emission to some suppliers, and the proper segregation, apportion, allocation is not done. In that case only the double accounting is a possibility, but through proper allocated product carbonization calculation and giving them the specific allocated part, that is avoidable. But the notion what you really asked is not a double accounting. I think Indrajit wants to add something to it.
Yes.
Yeah,
go ahead.
thanks, Sarika, for that. In fact, Ranjit, and then I think there were a couple of other questions around, emission factors and so on. I wanted to combine that. One thing I wanted to say is, A, yes, there is double accounting. B, the reason for that is because there is no globalized framework on how all companies in the world will report. So I, as a OEM, might be catering to 10 companies. I might choose the control mechanism as operational control, and I will report based on that approach. Right now, let's say I proportion my 100 units as 10 into 10 suppliers. Let's take, for example, right? From my perspective, I have done that. But when each of those companies are reporting, if they use a different control approach, often that is not clearly understood how that apportionment happens, right? So that is one thing. The other thing to do is, we are so focused. I think a lot of the discussion we did focused on reporting. One thing to understand is all the reporting in the world alone will not reduce 1 ton of CO2 equivalent, right? What will reduce is the actual action of optimizing your processes and systems. The key purpose of reporting when it started from way back from GRI, okay, was to help you understand where you are with the objective of reducing it. But today, reporting has taken center stage and the reduction part has been petered down. So what I would request is, while you do this reporting, which is required from a regulation perspective, if you're working with EU, not from an India perspective, but what is more important is, if you go back to first principles, understand how your emissions are being calculated, and just sometimes use common sense to reduce your emissions in your processes, all the reporting that you do going forward will automatically show that you have reduced your emissions and you will comply with the regulations that are required. Whether you're reporting to BRSR, whether you're complying with CBAM, everything will fall in place because your processes are in place. So that's what I want to say, that please don't get stuck that I am not getting an India specific factor. I have to use DEFRA or I have to use EEIO. Okay. Even if you used it, the objective is, even if you reported your emissions as 10 instead of 9, but you reduce that from 10 to 8, next time you are going to reduce lower emissions. Okay. Please focus on the reduction part, because ultimately the world does not understand what language or what standard you're reporting to. What it understands is the emission that you're reducing. Thank you.
Thanks a lot. I think that's a very important point. It's the reduction that ultimately matters. But I think what we are also, in a way, all of us are saying is, unless you measure first, then only you can start controlling. But that measure can have some errors. I mean, you have to start somewhere. We can't aim for perfection at the first step onwards. Vipin, next question. I think we can probably take one more. Yeah, go ahead.
Sir, next question marked to Sanjeev, sir. Question asked.
Sanjeev, I think, has left. So if any of the other members can address it, then perhaps we can say, go ahead.
Yeah, sure. So I'll take two questions together. One is marked to Sanjeev, sir, and another to Shama ma'am. So the first question is like in textile and apparel sector, there is a traceability of T1 and T2 supply chain, but for T3 and T4, visibility is very less. What would be the best way to calculate T3 and T4 emission? This is the first question. Second question, which is marked to Shama ma'am, is for a mining segment, like he has mentioned, like challenging to improve transportation efficiency, such as switching to BS6 or EV for transportation of ores or OBs. And I guess it is influenced by the local or the worker association. So he was asking about any thought on improving the GHG emission intensity in mining work.
Over to you, Shama.
So definitely, I think I agree with what Mr. Indrajit has said, that it's not just about the accounting, but yes, definitely having some actions at the ground. So I mean that starts with the accounting first, because so that we can understand that where is that area wherein we can have that gap. So as I mean the question that has been asked with respect to the mining, right? So in the overall, when we look at the overall emissions from the mining industry, so as I'm just talking about my company, because I have 90% of the emissions coming from the CPPs, which is our own captive power plant. And if I look at transitioning from the non-renewable energies to renewable energy, I definitely can, if my power plants are not there, then definitely I can reduce my 90% of the emissions from there. And the remaining 10%, which is coming from the mining vehicles which are running underground. So that's why we are working. I mean, and we had already signed an MOU with the companies like Epiroc, the Nomad. So these are the company, the Caterpillars, these are the companies who are working with us, providing the technology. But I still say that there's not much of the technologies which are available right now. We are open for, we already committed for $1 billion of the commitments are there, but definitely we don't have the technologies in place right now. So that's what we are looking at, that how to reduce that 10% with completely transitioning from diesel operating vehicles to the electrical vehicles. So yeah, that is also one of the area wherein we are looking for the technologies over there. Also, there are certain areas wherein we are using the coke as a reducing agent, and we are looking at how we can replace those coke. Maybe it's a hydrogen or so. So these are the areas wherein we look at, and we are looking at that, if any, not just the international companies, if there is any kind of a national companies who are available, who can provide us the technologies. But yes, technology is also one of the gap area in, making the mining industries as a decarbonized one very soon.
Thanks a lot for that remark. Yes, Vipin. Maybe one more question if you have. Otherwise, yeah, go ahead.
To Sajid only. It is asked by Mr. Melvin Matthew. The emission from electricity is scope 2 for a tenant, but for a developer who leases it, then it is scope 3. Would that be a double accounting?
I think, I had addressed that when I mentioned earlier. See, the only situation where you as a tenant will account for it as scope 3 is if you have an operating lease and you are using a financial control approach. Okay. Only in that condition, you will be reporting it as a scope 3. In all other conditions, if you have an operating lease and you use an operational control approach for reporting, you will account for it as scope 2. Okay. Now, how double counting is avoided is if this framework that I mentioned is used by both the parties. Okay. What will inevitably happen is if you are reporting it as scope 3, the other party will report it as scope 2. okay, or scope 1, or vice versa. Okay, so the framework, if it is used or implemented universally, will not lead to double counting. The only reason why double counting happens is because we use the framework based on our own interpretation. I hope that answers.
Yeah, I think Vipin, we may have to wrap up. It's almost 4:45. So therefore, to all the participants who have joined us here today, many, many thanks for being with us. To all the panelists, I think we perhaps have understood very well about the challenges, but I think in terms of solutions, there is still a long way to go. People are still learning. We are in the very initial stages, but the important thing is all of us are serious about it. And I think we all know that we want to address this, however difficult the challenges. And that is what kind of gives me hope. So with that, I would like to thank all the panelists again for their time and their deep thoughts. I'm going to hand it over to Vipin and Mrinal for the closing. Over to both of you. Go ahead.
Thank you very much, sir. Thank you all for your encouraging contribution to today's discussion. We have explored the complexity surrounding the Scope 3 emissions, highlighting the challenges and opportunity that lie ahead. As we look to the future, it's crucial for us to collaborate across sectors. The insights shared by our esteemed panelists today remind us that collaboration is key to developing innovative solutions that drive sustainable practice within our organization and industries. AEEE is committed to fostering partnerships that promote knowledge sharing and innovations. I encourage each of you to consider how we can work together moving forward, whether through joint research activity, workshop, or collaborative projects. Our collective effort will be vital in addressing the challenges posed by Scope 3 emissions. So on behalf of AEEE, I would like to express our sincere gratitude to all the speakers for their valuable contribution and insight. Your expertise and perspective have enriched our understanding of Scope 3 emissions and pathway to address them. Special thank to Mr. Pramod Kumar Singh for his keynote address and our moderator, Mr. Bhaskar Natarajan, for expertly guiding today's discussion. I also want to thank each participant for your active engagement. Lastly, I want to thank all the colleagues who have worked together to make this webinar a success. Let's keep the momentum going. I encourage you all to connect and collaborate beyond this webinar. Thank you, and we look forward to seeing you at the future event. Thank you very much, all of you.
Thank you.
Thank you so much.
Thank you very much, all of you.
Thank you.
Have a nice
Good
day,
evening.
everyone.
Yeah.
Thanks, everyone. Thank you.